Okay, so today was not a great day for Tesla stock, nor was it a great day for markets. But as I explained a little bit in the last video, there is a major red flag for investors. And honestly, it's kind of sad. I'll tell you why it's sad. Wall Street has been playing out this narrative that everything's fine. We're going into a soft landing, that there is this asymmetrical opportunity to the upside where markets may soar into year end and not much risk to the downside. In reality, talk is cheap. We've heard this saying probably hundreds of times if you're a grown adult. But that's exactly what's happening in markets right now. And we're all grown adults. Talk is cheap. But what is the money doing? The money is doing the opposite of the talk that we've heard. The money is actually very concerned, very worried, very bearish, if we want to use those words. Now, this is fascinating because, again, all we hear these days is soft landing this, economy's holding up that, employment markets are doing just fine. Yes, I understand there are different things happening right now. There is a potential black swan event or gray swan event in the making in the Middle East. Now, just long story short version of that, this could be a nothing event, or this could be a really bad event. It really has to do with oil and oil only. Even if Israel were to target nuclear facilities, for an example, it likely would not be that significant of an event for markets. Now, the financial repercussions of Israel targeting the oil market could mean oil spiking anywhere from $100 to $200 a barrel. That would mean recession for the US. That would just be a disaster scenario. I don't think that scenario is going to happen. Keep that in mind throughout this video. I don't think you're going to see oil between $100 or $200 a barrel. Now, could we break 100? Yes. Are we going to hit 200, an all-time high for oil? Probably not. Like, that's the worst case scenario. That would be like an '08 style recession, likely all over again. I don't think that's likely. But at the same time, you are getting a major red flag in markets. And I'm sure some of you guys already know what this is. But for those of you guys that don't, it is the VIX, the volatility index. Now, keep in mind, the S&P is down today about 0.5%. But you're still within 1% of all-time highs. But yet, the VIX is up 13% today. And nothing really happened. Okay, now yes, as I explained in the last video, we did get, I guess, if you will, confirmation more or less that the attack on Iran is imminent. Now, we kind of heard that over this weekend. There was a lot of speculation that the attack would happen over this weekend. It didn't. So there's more speculation coming out today that this could happen soon from US officials. And it was also reported that the UK diplomats have started to evacuate the country. Okay, great. Now, the VIX up 13% today is one thing. It's the VIX level that is really the concerning part of this, okay? The VIX is up to 21.65. Really, since September 26th, the VIX went from 15, now almost to 22. That is very unusual, especially with a market that is about, less than 1% away from all-time highs. That is not normal, okay? What I've learned in my years of investing, almost 10 years now of investing, each and every single day, learning as much as possible, trying to understand markets in a deep way. What I've learned is this. The most important thing you can do if you are a strategist, and Strategist is a fancy way of saying you're a stock picker, you're an investor, you do this on a day-by-day basis. You're not just casual, every couple of days, every couple of weeks, check your portfolio, read up on the latest news. Like, if you're doing this each and every single day, if you're watching these videos, you are a strategist. What I've learned being a strategist for 10 years, almost 10 years, is you want to watch the money, okay? Because people with more connects, people with more information and knowledge know things before everyone else. Okay, like, I think it's pretty fair to say market makers know good or bad things before we do. Nancy Pelosi's husband is a great example. He tends to just invest in the right things at the right time. I guess that's the perks of being Nancy Pelosi's husband. Okay, same concept applies to large financial institutions. Okay, what is big money doing right now? They're buying a lot of downside protection. That's the frankest, most honest, blatant way to put it. They're buying a lot of puts. Okay, that's represented here in the VIX. So at the same time, there's all this bullish commentary. Like Bank of America just a couple of days ago said their 6,000 target for the S&P 500 by the end of this year could be too low. Great. Goldman Sachs just came out with a year-end target of 6,000 by the end of this year and a 12-month price target of 6,300. Great. That's very bullish. But what is the money doing right now? It's actively going into buying puts when the market is less than 1% from all-time highs. Okay, fine. Now, for anyone that does not understand the VIX goes up typically when markets are falling. And that's not really what has happened recently. Ever since September 26th, markets have, let's see, from September 26th, markets are virtually unchanged. If you count the low of the day on September 26th, markets are literally unchanged. Okay, this was the 26th when you hit an all-time high. This is the line from the low of the day on September 26th. Literally where we are today. Literally where we are right now. You're unchanged. But yet the VIX has rallied from 15 to 22. Now, I do not know what is coming next. I don't. But this collective downside protection from big money tells you that something is coming. Whether someone knows what Israel is going to target, whether it is some oil production capabilities, whether it's nuclear sites, whether it's just military sites, whether it is some weakening economic data, whether it's a bad bank earnings this Friday, whether it's some other unforeseen event, I don't know. I don't know the specifics of why this is happening, but I do know why it's happening. It's happening because people are fearful of the downside right now. And that is really what you need to be mindful of. This is very abnormal. I've never seen this before, where the VIX is just going up day after day, virtually. I think you've only had 1 or 2 down days on the VIX so far, and they were very minimal since September 26th. But yet the markets are unchanged in the same time frame. Like, that just doesn't happen. I mean, oil continues to move higher ever since really September 27th. So I think there is some correlation between energy, inflation expectations, and this Middle East situation where, you got this, you're getting the spike in oil and the VIX is going up. Like, some of that makes sense to me. But the reaction in the markets being really unchanged from September 26th, that's what doesn't make a whole lot of sense to me. And if there is an event that happens, who knows again what it is, you could see a rapid catch down in markets. Judging off of where the VIX is today, the S&P should probably be down 4 or 5% from the level it was at on September 26th. You should probably be halfway into a correction, judging off of where the VIX is. If a typical correction tends to peak at about 30, that would mean the S&P should be down possibly to about 540 right now on the SPY. You're at 570. So I would be a little concerned about a potential for a gap down over the next couple of trading days, the next week or two. Now, usually the VIX doesn't just rise gradually and stay there. Usually the VIX spikes. And what we've seen lately is just a gradual kind of increase where people are just growing more bearish and more bearish and more bearish. Now, again, the VIX goes up when hedge funds and institutions, mainly retail investors, also contribute to this. But the real size and quantity here that moves the VIX really comes from hedge funds and institutions. When they go out and they're buying more puts than calls, number one, but also when they're willing to pay more for those puts than calls. As I explained in the last video, imagine you have a, call that's 5% out the money, a put that's 5% out the money. Okay, they're even on the upside and the potential downside move. Call it 5% out the money, both sides. Maybe that call is going for $100 and maybe the put's going for $150. Hedge funds and institutions are willing to pay more for downside protection. That's also affecting the VIX and causing the VIX to move higher. A lot of risk assets are also selling off today. Stocks, obviously risk on asset, they are selling off. Tesla and some of your more riskier names are selling off more. A lot of names that are connected to interest rates are selling off disproportionately more, like Tesla. And that's the other weird aspect of this, because 10-year treasury yields are rising. If there was a lot of fear about the Middle East, for an example, you'd probably see treasury yields actually fall, but the oil market could be a little weird. Like, is Jerome Powell going to respond to a temporary spike in inflation caused by oil and not cut rates as much? Or is the Fed going to cut rates even more because of economic weakness that an oil spike would cause? Like, I think there's a lot of confusion and uncertainty around treasury yields. And to be quite honest, what treasury yields are doing, because the 10-year treasury is back above 4%, which is just, again, kind of crazy with all of the uncertainty and all of the issues that markets are currently facing. Now, at the same time of all of this, as I explained in the last video as well, the fear and greed index is at 73, which is almost still an extreme fear, or extreme greed, far from extreme fear, which just goes to show like how mispriced markets are compared to the VIX. Again, suggesting the S&P should probably be down 4 to 5% from all-time highs. And you're not, right? So I think, long story short here, yes, we have events coming this week. You have big bank earnings that start on Friday. You have economic data this week, PPI, CPI, Michigan consumer sentiment. You have initial jobless claims, which I think initial jobless claims could be the most important catalyst of this week, believe that or not, as far as actually moving markets. You are at risk of a large downside move in a very short amount of time. Now, it's going to be funny, okay? Because at the same time, Wall Street has said all of these bullish things on markets, which, who knows, for right or for wrong, when we do get that negative, large downside move, based on all these things that we're talking about here in this video, Wall Street's going to act like you were late to the game. You were late to the party, and they were first because they're positioning for this. Now, as I've explained in many videos now, Wall Street doesn't want to come out and spook you with their commentary because they're going to make less by management fees. People don't tend to invest a lot of money when they're fearful, which is, the problem with most people and why they shouldn't manage money is because when you are fearful, when markets are fearful and stocks are selling off, is exactly when you should be investing more money. But people don't tend to do that, so hedge fund managers tend to make less money if they say bearish things, if they're bearish. Now, I think there's a good case to be bullish or to be bearish right now. Honestly, I could make a case for you either direction. But what I can tell you definitively is the money is bearish right now. So forget what I say. Forget what Wall Street says. Forget what everyone says. The money is bearish. That's the bottom line. That's what you need to know, and you need to be prepared. Thank you guys for watching. Stay safe out there. hit the like button and subscribe to the channel if you have not already. Thank you for supporting the channel. Those of you guys that opt to do that by becoming a member or joining the trading community. If you guys want to come trade with us live in real time, check out that link down below in the description of this video. Thank you for supporting. Just watching these videos is also supporting, so thank you. You guys have a great rest of your day. Be prepared, and I will see you in the next one.